This is Back Roads of Illinois, server to farmers and ranchers in central Illinois in the mid. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program. I'm Cesar Delgado on a Thursday. The commodities markets are challenging and demand from corn and beans is lower. Farmers are wondering how much of maximum cost of business for today's world of agriculture. We were talking about the challenges of farming with Chad Hart from Iowa State University Extension. And grains and livestock markets is getting trickier, more about the fundamentals and technicals. Demand for right now with these prices. I will talk about it with Sam Hudson from Corn Belt. Sam is the vice president of Corn Belt in Brimfield, Illinois, outside of Peoria. Otherwise, we are welcoming him to the show on today. This been Back Roads of Illinois. The commodities markets are challenging and demand from corn and beans is lower. Farmers are wondering how much of maximum cost of business for today's world of agriculture. We were talking about the challenges of farming with Chad Hart from Iowa State University Extension. Chad, how are you? And glad to join us for our program today.
It's my pleasure to be with you, Cesar.
Chad, let's start with our conversation about updating on the season for central Iowa. What's latest news on this week about the harvest season?
Well, we've definitely seen harvest start up here in central Iowa. Early reports on yields have been actually pretty good, comparable to what we were seeing in 2024. But I think there are some concerns as we get deeper into the harvest season. I know here in central and throughout the state of Iowa, southern rust has been a problem, especially within this last month or so. And we are fearing that that's probably stealing some yield here on the back end. And I also know where you are, Cesar, there in Illinois. And as we look further east than that as well, we've been seeing drought pressure building throughout the eastern corn belt. And so I think we'll see USDA slide those yield numbers down as we're looking over the course of this year. But all in all, it still looks like a record producing year when we're talking across the corn market.
You heard about the yields trends are in 200 between 2020.
Well, we've definitely seen strong yield trends for both corn and soybeans over the past 80 years or so. You can go back to when, the first crop hybrids were really brought online in the late 1930s. And when we're looking at corn, it's traditionally 2 bushels per acre per year. And if you think about where USDA typically starts their yield numbers at the beginning of each year, they're utilizing that yield trend as we've looked forward here over time. For soybeans, similar sort of thing happens. It's about 6/10 of a bushel per year as we look there. And so that's the deal. We sort of rely upon this idea that we're able to produce more and more crop, even if we don't increase acreage at all based upon that yield trend. But what it also tends to mean is that we're looking at the need to market more and more crop over time as well. I describe it, for example, in the corn market, is that basically every year we have to find about 170 to 180 million more bushels worth of demand because the yield trend would suggest we're going to have that much more supply come online in the next year, even if nothing else changes.
Of course, I am just curious about what is your thoughts on the August report from the Department of Agriculture, Chad?
Well, I think when we looked at the report, to me, it gave us what we were seeing back in the case of the August report, sort of how the crop looked August 1. The September report updates us to September 1. And then as we look forward to next month's report in October, that'll really give us a snapshot of what the crop looked like October 1. And I think one of the things that's happening on the supply side is that the deeper we get into the harvest season, the more we're recognizing some of the smaller problems that are starting to nick away at yield over time. August, things really look good at the beginning of the month, but we could see things turning. We could see the southern rust building in the western corn belt and the drought conditions starting to take hold in the east. And those have continued as we've approached harvest season. But when I also go back to that August report, what it also showed is sort of a divergence between corn and soybeans when it came to what's the outlook for usage as we look out there. The corn usage numbers are showing very strong numbers. We're looking at record projected usage overall for corn, with a lot of that being driven by increases as we look at the export markets. On the other hand, the soybean side is showing good usage, but not record levels. And where it's showing significant weakness is in the export market. So you're definitely getting, like I say, a different story depending upon whether you're looking at corn or soybeans based upon that expected export potential.
Through Chad. We are talking about the commodities markets as lower than previously years, and the interest rates are displayed. What is your thoughts on the farm prices? Are things going to be in for the future soon?
I think as we're looking there, I describe what we're experiencing right now as sort of similar to what we went through a decade ago. If we think back to 2012, 13, 14, 15, that to me has been very similar to what we have seen here in 2022, 23, 24, 25. With the biggest difference, though, being this is a little bit of a deeper of a downturn for agriculture, with a lot of that being linked to the higher interest charges we're facing right now that we didn't have to face a decade ago. I think as we look at the farm economy, it still has some strength in that, our land values remain strong, and that means we have a strong asset base to fall back on. But what we've got right now is a strong liquidity problem that the markets just aren't offering up the prices that help us cover our cash flow. And therefore, we're having to get either very creative in creating additional cash flows, or we're having to fall back on that asset base as collateral to obtain loans to get us by here in the short run. And that is always a problematic thing to do. And that's why the farm economy is feeling the pinch, and you are hearing those calls for additional government support coming to agriculture.
Do you have some concerns about finding us that farm prices are looming to near future?
I have some concern, but at the same time, too, like I say, I am encouraged by other areas here. For example, let me pick on the corn market. As we think about what's happening within the corn market right now, we're looking at projections of the largest crop we've ever had. Right now, 16.8 billion bushels. Yet, despite that incredibly sized crop, the market prices are holding actually fairly good. They're not at a great level for us, but they haven't really fallen completely given the size of that crop. And that points to that there are some things in the ag economy that do seem to be hopefully headed back in the right direction. As I mentioned, corn usage is projected to be at record levels here for this marketing year. And hopefully that's signaling that at least some of our ag markets maybe have found that bottom and are now trying to work their way upwards again to help balance out the economic pressures for our farmers out there.
What is your final thoughts about this farm economy?
Well, as I say, as I look at the situation we're in now, it reminds me a lot of the downturn we suffered a decade ago, with the biggest difference probably being the higher interest charges that farmers are facing right now. With that said, I think, as far as, the moves that farmers need to make as they're dealing with the financial concerns right now are basically the same moves they went through about a decade ago. And I like to say it this way. It's not that we don't know what we need to do. We actually do know what we need to do. It's just that it's not fun. It's not enjoyable to make some of the moves we know we need to make. We have to control our cost. We have to spend more time putting pencil to paper and looking at the return on an investment when we're making those input cost decisions. We have to shop around on prices in some cases, we oftentimes we get used to buying from certain folks or buying from certain companies and not necessarily looking for the best price for our inputs as we're looking forward. Well, we can't afford not to do that now. And at the same time, too, it's one of these deals of not only do we have to look at our on-farm expenses, but we have to look at our family living expenses on the farm as well and try to pare those back, knowing that, that off-farm spending that we have for family living does impact the farm business as well. And so, like I say, these aren't easy choices farmers have to make, but since we just did this about a decade ago, we know how to do it. We just have to have the fortitude to do it as we work our way through this economic downturn.
Yeah, it's about time and management.
It is. It's about time management, but it's also about making some, I would say, harder choices. I'm always, recall that, when you're looking here, the part of the, let's call it good part about having the cycles that we do within agriculture is what it does is it does force us to continue to evolve. That, it's not an easy business to exist in. In fact, it's very challenging. And the idea is that it's challenging not only on the physical production side, but on the financial and let's call it mental side of the game, where you have to figure out how to work with a high cost, low price environment at times. And other times it's easier to make those choices. If we go back, for example, 3 years ago when we were looking at very strong crop prices and record net farm income across the country, that's when it's easy to sort of see that, farming and make those choices. But when things get tough like they are these days, this is where those true farmers come out and that, they'll figure out a way to not only survive these conditions, but figure out how to thrive long enough to catch the next upswing in the ag economy.
Grains and livestock markets is getting trickier, more about the fundamentals and technicals. Demand for right now with these prices. I will talk about it with Sam Hudson from Corn Belt. Sam is the vice president of Corn Belt in Brimfield, Illinois, outside of Peoria. Otherwise, we are welcoming him to the show on today. Sam, welcome to the show. And how are you today?
Doing well. Harvest is getting into full swing around here, and so we're glad to see an open forecast to get guys through the field.
Good to have you on again.
Yeah, glad to have you with me, especially this
We are
time of year.
seeing the lowest price in the grain sector in the corn markets. How are we going to see the technical buying in the corn markets?
Well, if right now we're flirting around with the 100-day moving average. The tough part about price direction at this point in time is just the fact that we're harvesting a bunch of it, and open interest is going to be getting deeper, and it gets harder to get a big market move until cash markets can kind of sort everything out. So there's a possibility you could get back and test the 200-day moving average around 440, maybe 450. But the weakness in the bean market is definitely having an impact on things too.
How is the fundamentals trends in the corn markets and beans?
Well, for corn, it's good. Exports have been great. We put a really big export target out there, but we're already beating it. So we're about 5% ahead of USDA's target. But on soybeans, without China, we're about 19% behind already. And so that becomes the point of concern here. If we can't get some sort of a trade agreement or a can kick down the road to facilitate or give the trade an idea that we even can. So I guess that's where we're sitting today, and that's already shaping ideas for what next year could look like.
Of course, Sam, we will see.
That's right.
How is the supply tighter to the grain's demand?
Did you ask how it's tied? I'm sorry, repeat that.
How is the supply tighter to the grain's demand?
Well, I guess there's ideas that yields could still come down on the supply side, but that's kind of a slow affair. And even though we're maybe bringing those yields down, you're still looking at a record type of harvest that we've got to find a home for, even if we are bullish price. So once that overrun is calculated and dealt with, then I guess we'll see where the end users are and how thirsty they are to get cheap corn bought here at harvest if we don't see prices take off.
How is the demand for the wheat?
It's been decent. I mean, better than the USDA pace, but that's all relative to their estimate. When you look at things on the whole, we got 40% plus stocks to usage here domestically, so there's just really nothing attractive about it. It's really been more of a follower of the corn and soybean markets, and funds are still holding short positions, but they have no reason to really get out of them either.
Tomorrow is having a grains quarterly report on the morning. What is your position on the quarterly report?
Yeah, quarterly stocks. I mean, some people think you could find a little bit more stocks in the corn, especially the way basis and cash markets acted into the end of it. I personally don't think you're going to see a big enough shock to matter there, but definitely going to be a point of interest. And these issues we talk about with some yields coming down in corn and demand being good and demand being bad in beans. I think all these issues will continue to trump anything that happens there.
Well, I'm, uh,
What is your thoughts on the yields from last month's report?
Not surprised at all to see a reduction in corn. I would expect to see more of that. Soybeans, on the contrary, I think, so far from what we've been seeing are pretty good early yields, very consistent yields because you don't have quite the disease pressure. But again, I think our demand figures on beans will probably matter more. For corn, we maybe just be trading two different balance sheets, one for corn and one for soybeans. And if China doesn't step in and start buying up some of these soybeans, you could easily add 250 to 300 million bushels to the carry out, and that's not going to be positive prices. So that's what's going to be top of mind as we go into the end of harvest here.
You know that in the cattle markets with these prices are currently unstable markets. What do you recommend within the premium risk for these volatility?
No, option volatility has been all over the place with the feeder cattle with these wide trading ranges. You can you're looking at some pretty pricey options if you're looking to buy them. On the contrary, if you're looking to sell them, you might be able to bring in a pretty good amount of premium. And so you really have to play things by time frames, depending on what the producer's risk profile looks like and the timing of that. But the big conundrum here, I think, over the next 3 to 4 months is how do we bring together some of these trade agreements? Do we unroll any tariffs or disagreements with Brazil to bring in more beef to the U.S., as well as the border, reopening? So a lot of focus on the screw roll right now, but we got to understand that that's not the only reason that we're here. And so, the recalculation of the values of those markets into next year is going to be important. And, we are probably starting to see some herd rebuilding, but I don't think it can happen fast enough. And if the government gets involved here, you just never know how they can make it worse. So expect the volatility to continue, I guess I'd say.
What is the fundamentals from the cash cattle side for this week?
Mixed. We've seen cash trade slow down a little bit here. Saw some feeder trade last week that was actually quite a lot lower. But then you got the headline on the screwworm again. So I think how we digest that and see cash prices trade probably into early middle part of next week will be more indicative of where the market really is right now.
Do you have some thoughts on the balance sheet on the corn estimate from the growing season?
Well, I would expect the supply number to come down. But as I mentioned, we pressed the demand throttle so hard that I don't think you can increase that either. So that leaves us, with the idea that you could shave some of these supplies off. But we still have to account for, a 16 billion bushel corn crop. And so end users, it's going to take them a while to get through that. And if China stays absent, we can draw our corn stocks down because we'll be able to plant corn again next year all over again. So, that Chinese trade situation almost becomes a hinge pin as we get into winter here and our export window closes with China.
Do you have any final thoughts about the fundamentals with these corn prices?
Still historically cheap when you look at it from the feed side of things. And, from a margin standpoint on biofuels and again, import margins around the globe, we have to continue to watch out for that. Stocks to usage both domestically here and around the globe have continued to tighten. And so that's not going to change unless you incite a reason for us to plant a lot more corn next year and actually raise it. But, with us being the biggest producer here, any sort of a hiccup provides a problem really for everyone. And that's what we carry into next year no matter what.
Thanks, Sam. We
Thanks,
were
Cesar.
enjoying our conversation for today.
We appreciate it. Thanks.
This is Sam Hudson from Corn Belt on back roads of Illinois.